Insurance Roundtable. I am Eric Benoit, a research analyst working for Natixis in London. And alongside my colleague Mark Woolley, who's head of insurance coverage in Europe, we shall be your moderators today. If you're following us online, feel free to ask your questions in the sidebar. We will be reviewing all of that at the end of our session. So perhaps more discreetly than others, the insurance sector is actually undergoing major digital transformation. Considerable sums have already been invested by the industry leaders to try and meet the new requirements from their customers, such as smoother onboarding, faster claim management processes, and more personalized services. So, as we will shortly be discussing with our excellent panelists, technology can unlock a finer degree of understanding of risk at the underwriting level, but also help redeploy or reinvent product distribution whilst keeping costs under control throughout the value chain. In short, technology has become an essential element of insurers' competitiveness in the post-COVID environment, and of course, a very important weapon in the fight against the threat from digital attackers. Naturally, the difficulty lies in the ability of each company to execute and implement this highly strategic transition phase. And we will be talking, for example, about the challenges of managing legacy IT systems whilst trying to invest in innovation at the same time. And of course, the importance of collaboration on the road to insurance 2.0. Finally, for insurers, technology is also a way to enhance their role in society. And whether they choose to take part in mobility projects or design climate solutions or want to provide online healthcare support, they are simply putting themselves in a position to serve with much greater impact. So the insurtech ecosystem is increasingly vibrant and dynamic. It is often at the forefront of artificial intelligence, of automation, marketplaces, blockchain, tokenization, and so on and so forth. Over the past 18 months, quite a significant number of insurtech IPOs, such as Bright Healthcare, Oscar Health. We've had Root, Duck Creek, Lemonade, but also quite a few interesting SPAC merger transactions more recently, such as Clover Health, Metromile, and Hippo, for example. And these have taken place in the US and represented roughly $60 billion of day one combined valuations. Now, I have to warn you that for most of these stocks, 2021 has proved to be a rather painful year. But the underperformance did not deter venture capitalists or private equity funds from investing in the sector. And in fact, in the first half of this year alone, $7.4 billion have been invested in the sector. That is 4% more already than the $7.1 billion that have been invested in the whole of 2020. So what is really striking, if you are looking at those numbers a bit deeper, is the prevalence of very large, very large late-stage funding mega rounds, i.e. rounds of more than $100 million. If you take, for example, German digital insurer WeFox, these guys managed to raise $650 million on the same day that British pet insurance company, bought by many, managed an amazing $350 million Series D. It was quite an impressive day. Collective Health, Alan Shift Technology, the French fraud detection specialist, all managed to add to that list with 200 million plus types of mega rounds. In total, I think it's 3.3 billion money of fresh capital in those mega rounds in the second quarter of this year alone. The other interesting point worth noting is that 64% of all that money is currently going into distribution, with a much smaller 28% going to B2B companies. And in that context, perhaps it's not so surprising that we've seen the largest ever insurance sector Series A secured by Boltech with $180 million of fresh capital in May. So where is this all going? Is the sector finally ripe for disruption? I can see some of you laughing already. Or are we actually just noticing or witnessing a new phase of natural evolution, perhaps? We shall find out in a moment, but for now, I'll hand over to Mark for the introduction of our guests.
Thanks, Eric. Hello, everyone. Well, fortunately, you don't just have to listen to me and Eric. We've got some real experts here. Sorry, Eric. I'm not suggesting Eric is not. In fact, you should read his latest research. It's excellent on InsurTech. But to start with, David Dorn, who is from Accenture, leads the insurance sector on the strategic advisory side for Accenture. Very experienced both in consulting but also working at AXA among others. So a lot of background in this field and clearly a topic of which we'll get on to of great focus for your clients. Nicolas Marescot, who's Deputy Director of Customer Needs and Innovation at Massif. And that's a company that's been through a very interesting digital transformation in the last few years, which we'll talk a bit about as well. Looking forward to that. And Franck Devine, finally, but in the room at least, and we'll come on to the last one in a second. Franck is Global Head of Open Innovation at AXA Next. So lots of interesting internal and semi-external opportunities that AXA's been working on. Finally, Deus Ex Machina, as it were, Sasa Baricevic, who, again, a wealth of experience, currently as Head of Carrier Solutions Group at Aon, but also formerly on the insurer side with Hiscox, as, among other things, COO of the London market business there. So a really strong panel, so I'm looking forward to an active and vibrant discussion with you guys, including Sasha. There's a lot going on, as Eric was alluding to, and the pandemic hasn't transformed everything, but it has changed the emphasis and perhaps the pace of change in some respects. So, what in a post-pandemic world, is the use of technology, advanced data analytics as well, among that, is that more important than ever for insurance companies? David, what are you finding with your clients?
Thank you. Can you hear me all right? Yes? Perfect. Thank you for the question. I think everybody had a digital agenda, digital data that was very present previously. But post-COVID, I think this is, as you said, a very strong accelerator. What we have observed at Accenture at the last, I would say the past 12, 18 months is the very, very large transformational journeys, as we call it. What I mean by that is it's those type of journeys that involve hundreds of millions of value creation at large carriers. Usually, they were limited to the US. They are coming to Europe. This is one big aspect which is changing. Second aspect, it's those journeys. We're not speaking about plain vanilla business process outsourcing, the typical ones. It's really digital transformation that are tech-powered through the cloud, artificial intelligence. And the third difference that we observe in this post-COVID wave coming to Europe is that it's not only on cost reduction, the typical topic that you might have at insurance companies. It's 50-50 cost reduction and 50% on revenue uplift and new product and services. So at least those three major differences that we're observing about the past 18 months, I think.
And Franck, from your seat at AXA, does that echo with you what you've seen? And also, Eric's talking about a lot of money coming into the industry, both through SPAC mergers and IPOs and so on. And that's obviously the sort of the tip of the iceberg that you see that gets all the press. But where do you think the money is actually going in terms of long-term investment in this sector?
Yeah, so Eric said that it's 60 or 64% of this fresh money and notably VC money going through mainly the distribution part, which means that at some point we have the agents, the distributors, to get access to digitalization, to tools, to AI that could enable and ease the relationship with their customers. So I think most of the money is going there, which means at some point that there is a very few money going to a new product. It's like we are working in a world where Apple would make money on the iPhone 1, right? So usually when we look back, we can look at, we have adapted the existing traditional product, I would say, to the online channels. And that has been what has been done so far. There is a lot of new things to come, like usage-based insurance, for instance, in terms of product. And if I look forward, I would have a look on what we call algorithmic product, like parametric insurance, for instance.
Mm-hmm. Interesting. And Sasha, so I mean, working at Aon, Sasha, I'm looking to the camera here past you guys, but looking at Aon, one of the world's biggest brokers, you clearly work with an awful lot of different carriers, and who must be pursuing different initiatives, different agendas, and so on. What do you see as the key standouts for you among the insurers that you're working with, as well as within Aon itself?
Thanks, Mark. If I can maybe offer a slightly, by the way, can you hear me?
We can now, yep.
Good. If I can offer maybe a slightly different angle to the observation of prior participants, in a sense that I think there's Aon mostly deals with in a large commercial segment space, and I think there's a slight divergence of where the money is going and where the money is focusing in a, let's call it a consumer space, where I totally agree that a lot of money is going into the distribution angle of that, which is fundamentally, you could argue, where there is most scope for competition with respect to the proposition to the client. I think the large commercial space, there is certainly increased attention and increased funding, certainly internally, enabled by the new technologies and information and data. I don't know whether that is precipitated by COVID. It's probably helped just generally increasing the awareness of what's possible. But I think the other part of that is simply the lack of ability to compete on other parts and desire to differentiate the product, or at least desire to differentiate on a view of risk. I think the other part that probably helps with that is dramatic, I would say, drop in a unit price of availability of the technology itself. You know, what is possible today certainly was possible 5 years ago, but the price point of that was dramatically higher than it was today. The other thing is obviously in a large commercial space, there is a significant amount of money going to replenishing the balance sheets that have been stretched and to a certain degree damaged over the last few years, be that through natural catastrophes or COVID itself, as well as the supply and demand and the pricing cycle is also inviting money to fund new entities. So I would offer those two observations as a slight juxtaposition of what's happening in the consumer space versus large commercial space.
And of course, for the incumbent insurers, there's so many legacy systems and legacy data setups and so on that need to be parsed and brought into the new millennium. I guess that's where you're saying some of the machine learning technology, for example, where the cost has come down dramatically, can be quite useful, I assume, Sasha.
Yeah, absolutely. And I think you could almost argue that some years back, when the price point of this was very expensive, so to speak, the incumbents did have advantage over newcomers in a sense that they were the ones who were able to fund that. Having said that, the implementation of that within a architecture that is saddled with legacy systems and complicated infrastructure is quite a meaningful challenge versus starting from scratch. And I think that focus on deploying that technology today, my observation is there is certainly a strong hope, for lack of a better word, of being able to increase the precision of pricing and ability to differentiate on a view of risk and express that on a real-time basis in terms of pricing, in terms of conditions. There's certainly, there's the cost reduction, internal cost reduction is not forgotten, but I would argue to a certain degree, internal cost reduction at large insurers is something that has never sort of lost focus. It's just the ability to execute, and it's a sort of an ongoing effort.
Okay, thanks. I think there's some themes there we'll come back to as well. Nicolas, turning to you. So, as mentioned, Massif's been through a journey, as it were, the last few years. So, I mean, coming back to Sacha's essentially set the challenge there, right? So, big incumbent companies, lots of legacy stuff to deal with. Potentially, new entrants can come in certain business lines using relatively inexpensive new technology and fresh capital. How do you guys respond to that? How have you been responding to that?
For 3 years, we've been overhauling all our 3 main core information systems in property and casualty, finance, and health. This is huge investments, but it's mandatory to prepare the future. And you were talking about digital, for instance. We're also revamping our customer relationship management, but we're one of the first in France in the finance sector to apply machine learning to smart bidding Hagakure strategy with a partner, Kiaid. And when we launched our SEA campaigns, we got 135% increase in the number of leads, while our acquisition cost decreased by 56%. So it's really both working with partners such as Guidewire on core systems and on the cloud, and on new technologies and AI.
Great. And so one question from me on that, I guess. How much of that was sort of clean sheet building from the ground up, and how much of it was adapting to your existing setup and making that work through that new front end, as it were?
If you take, for instance, property and casualty, we had a host system, legacy, and really we are switching it to Guidewire and the new one. But it's a long journey.
Yes, absolutely. Okay, Franck, how about you? What are you seeing by comparison within the AXA family? Because it's a broad family, and I'm sure there are lots of different initiatives that have been going on in AXA.
Yeah, from a global perspective, innovation is happening from the entities, right? So they have to reinvent their process, put AI and machine learning in their claims process, etc. So first of all, I think the first level of innovation is to say the companies, the opcos are launching initiatives at local level. Then we have developed internally, centrally, I would say, our own capabilities to scout, select the top 10 or the top 20 insurtech enablers. I'm referring to this category of insurtech players, where we could take an initiative from an entity and scale it to other entities. So I agree with what has been said in the, I would say, the weight of our legacy system. However, I believe that big tech players like Guidewire, Salesforce, Capgemini, Accenture can help us to move a company to build this connectors level, I would say, and put the enabler, the insurtech, within our core system. So, for instance, we have been scaling Shift technology, which is, by the way, AXA babies, as we call it, which means that the company is born with a former data scientist at AXA. And we worked with them and we scaled it in 25 countries. So from 1 country to 25 on fraud detection.
Great. So insurance is a fiendishly complex industry in many ways, but one of which is that it's not one industry, it's several, right? Life, non-life, reinsurance, primary. Bancassurers, I know you work with them very closely, David. How does this balance between cost reduction and growth acceleration and product innovation, how does that differ perhaps with the bancassurers, which obviously are so prevalent in the French market?
I think it also comes back to what Sasha was mentioning. Depending on the sector, obviously you have very different strategies. What we've observed is that, and I don't want to make large generalization, but the bancassurance sector, post-COVID, basically it's a growth story. I mean, and you know why it's a winning formula. It's very relative in terms of profitability to banks. So basically, whenever there is a strategic plan, and there's been quite a few on the bancassurance sector, it's about growth, growth, growth. And then technology has obviously a very important role to play. Just to give an example, and it's not specific to the French example, but leveraging the data from the bank to sell better or serve better your customers with insurance product, that's the graal everybody's looking for. Nobody's doing it. And when you look at the equipment rate of insurance product in even the best bancassurance operations, I mean, basically, sky is the limit. So obviously, this is one angle where technology has to play. Quite a lot of money is pouring in because that's the way to do it. Obviously, if you are an AXA, an Allianz Generali, this is a more complex scene. You're talking about rebalancing your portfolio of activities, structural cost reduction, and I agree, it has never been out of the radar. It's very much on the radar, but there's also growth and distribution. A lot of money is flowing into distribution. But then obviously technology has a different role to play, and here we are speaking more about the big transformational journeys that I was mentioning, not only cost reduction plus new product and services.
And so what I think we're hearing is that there's a lot of scope for collaboration and for, lost the word, but there's a lot of scope for the fintechs, insurtechs, and insurance company incumbents actually to work together. We haven't, with a few notable exceptions who are sort of breaking through, we haven't seen that many new tech-driven propositions in terms of large-scale unicorns and carriers and so on coming through that are fully tech-built. There are those honourable mentions such as Lemonade and so on that we touched on earlier, and many others. But do you guys reckon that the collaboration is actually the more meaningful aspect of the insurtech journey, if you like? And how do the incumbents best work with those new companies? And there are various different models we've seen out there. There's those with incubators, there's those who work with a selection of technology partners, there's those who work with yourselves and other major firms or consulting firms, BPOs, technology providers. What's the best model, do we think, and is there one best model? But Nicolas, perhaps from you to start with.
We're working on our investment system to be more, getting more synergies between a classic group as ours and new companies. So this means changing with a more structural approach and not only looking for financial gains, but operational ones. For instance, Massif is and we believe also in collaboration. Massif is a founding member, and we are chairing the 4th edition of French AssureTech, and we are following with other mutual insurance and assistance companies, 11 startups, and in our pathway, the idea is really to support a Massif innovation leader. Because it's always complex with different companies, both startup and incumbents, with different cultures to work together. So it's helping our leader to give some visibilities on the startup about his sponsorship partnership. And then finally, for instance, we're working with Testamento, one of these startups, and it helped us to dematerialize our beneficiary clauses in our life insurance contract. So, in fact, working with startups helps us challenge our internal processes, practices, even offers. And for the little story, we're also working with Shift as the AXA baby, one of these many accidents.
Very good. I'm glad to see the whole industry is collaborating to some degree. Frank, working with startups, easy, difficult, somewhere in between?
Yeah, it's clearly super difficult. We don't used to work at the same speed, with the same time horizon, right? We're working with entrepreneurs in a corporate environment. So that's clearly a real challenge. But we are learning a lot from that on both parts, actually, when you listen to those guys explaining cooperation with corporates. And so far, it's still very local. And I'm saying that because I've been traveling across 3 continents and working in 3 verticals, insurtech, fintech, and health tech. And those technologies sounds like design globally, but actually it's still very local. So you have Chinese competing with the US ones, etc. So there is nothing that has traveled successfully from a continent to another. And you see the lemonade business model, like is coming from the US, is a direct business. And you have in the opposite side of the world, in China, where, by the way, insurtech has been invented, I would say. You have the B2B2C model, which we call now embedded insurance, where Zhonggan has been doing that for the last 5 years. So 6 years maybe, and quite well and at scale. So when we talk about scaling from a country to another, is really a challenge. We could replicate or duplicate or really scale, and it has 3 different meanings in terms of technology, and that's a choice that we are making each time we want to take an initiative from a country to another. So at some point we could be a kind of super international accelerator for those companies, because Shift Technology, a French company, is now working in 25 countries. But also we can select local players, help the local company, AXA companies, to select their local players, maybe with another way to proceed artificial intelligence, etc. So I've been talking about Shift Technology, but you have many other players. I think it's 1,500 insurtech players across the globe, 200 in France, and many AXA babies, Descartes underwriting. No, but we are, I think, maybe proud of being, at the origin of this kind of initiative, because the model of Shift is much better being outside of the company than staying inside of the company. So it's not only a matter of build versus partners, is also a strategic look at our environment and what we want to do with this innovation in terms of impacting the business.
And that is, in part, the conundrum, right? So you have businesses and individuals and small teams of creative individuals who can accelerate far faster in that early phase outside of a big corporate. And then the challenge is, how can a big insurer rely on that small startup for a core part of its business? And David, what do you...
Maybe
sorry, Frank,
to complement.
Yeah.
So we have to start at some point where the company is starting to be mature. For me, it's around Series B. Because the people that we are bringing in our in meetings from our side is 20 people, right? Because you have to involve the DPO, the legal, the IT, the security, etc., etc. And you have to, there have to be enough people in the room to address all those needs. So for me, it starts at Series B. It doesn't mean that we don't look at before. We track progress on a few early stage companies, but then when we start to cooperate, it's a Series B. And then, again, we rely on big tech players that will do these connectors and help us to scale, and help them to scale, actually. So what I see is I see Zelros, for instance, getting a certification on Guidewire, getting a certification in Salesforce, and getting a certification from Microsoft. So we also rely on those big tech players to push those initiatives at global scale.
Interesting. David, what's your perspective?
I think it's a complex topic, and I think there's a little bit of a discrepancy. There's never been so much money poured into the system. That was the introduction, and at the same time, when you speak about the collaboration story, it's at best half full glass story, because if you look at corporate venture capital, it's mixed feelings. If you look at incubators, it's mixed feelings. And if you look at the direct collaboration between startups and insurers, this is mixed feelings. I mean, it's basically apart from a few exceptions, it's POC level, it's proof of concept level. And I think I fully agree with Frank. I'm not saying that the insurtech is not changing the way insurance is done, but maybe not to the same extent that fintech and banking or the payment sector is. It's not. We're not speaking about disrupting, at least for the time being, disrupting a sector right now. I do believe and fully agree with what was said for the B2B startups or professional service startups. It has to go through an intermediary because you need to scale up. I mean, even the 25 country collaboration we shift for a company like AXA, I'm not so sure it changes the line. It's interesting, but doesn't reduce the loss ratio by 2 points. So you need to have those intermediaries, and I think intermediaries being tech company, professional service company, because you need to scale up. What powers the transformation is not the cloud technology. It's growing 20%, 30% a year. So you need to compete with those type of speed of players, and I think that goes. After that, there is the direct attacker model, which is somewhat different, and the collaboration here is more, if you want to have a collaboration, it's more through reinsurance. So for instance, reinsurers are very good at that. They are more into the deal-making spirit, and they do reinsure part of it. And then you learn, and then you grow. And it's probably a more, and some players have done it. I mean, nobody knows, but AXA does reinsure Oscar Health in the US. And so, and Lemonade in Germany. So that's a way to cooperate and to probably to get I would say bigger prospect and bigger impact at the short term.
Excellent. And Sasha, I mean, so switching gears to the broker part of the world, and interesting you talked there about reinsurance and as part of this model, and clearly, you know, even going back into the past, you see standout examples like Munich Re with Admiral going back to 2 decades, right? But Sasha, both from Aon's own perspective and in terms of the clients you're working with, how do you see this this technology journey in terms of working with startups, working with large tech firms, some combination of the two?
Yeah, I think again maybe there's sort of 2 levels to it. There is I think there's a strong collaboration, for lack of a better word, with very large technology providers, Microsofts of the world, Amazons of the world, and most of that is, I think, focused on and directed towards internal capability building, for lack of a better word, or internal reorganization or internal efficiency savings. I think we certainly work with let's call them I don't want to call them insurtechs, tech startups that have very specific niche capabilities. Things like applying NLP to be able to be reading documents automatically and lift data out of documents, and so it's very, very niche. And I think it's an interesting thing. You know, the business that we're in is so frantic, let's put it that way, that ability to stop and there's challenges to it, and the ability to properly engage with a startup who would be coming to somebody like Aon for scaling up Whereas the offer might be very, very niche technology offer, and it doesn't really apply across the whole spectrum of what we may need. So I think that the real challenge is finding the capabilities, niche capabilities, and then by definition you cannot find it in any one provider, and having to sort of almost like create a milieu of providers and integrate an internal solution that can be scaled up. Other than that, I think they're certainly partnering with insurtech based or insurtech segment startups where it kind of makes sense. And I think by definition that the industry is so intermediated and so fragmented, you end up in the challenging commercial conversation, whereas on the other side of the table, you have a startup who ideally would like to scale up across the whole industry, versus on our side of the table, we'd like to create some exclusive capability. And and that's a dance that I see we play and everybody else plays with startup companies, and they try to navigate the best they can.
Right. So let's talk a bit about tech again. And in particular about social responsibility. How is it that insurers can use technology to attract maximum love from the public? Nicolas?
We are an insurer, but a mutualist insurer. So it's really meeting members and customer needs first. 3 examples. First one, saving life. With Liberty Rider startup, we included their offer into our insurance for motorcyclists and to reassure the families. Because if you have an accident, if you fall, and you don't answer the alert from your phone or the call from our dedicated center, then we will call and notify the emergency services and send them to your last GPS location first. Second one, yesterday we got a prize at Big Data and AI event for AI for Good. You'd say, okay, GDPR, regulation, etc. We have in many operations free text zones. How can we make them GDPR compliant? The first solution would have been to delete them all. Easy, but brutal and counterproductive. So we choose to use deep learning and to check in real time, and depending on the context, are we talking about health, about car, if the text you're typing in natural language is not racist or sexist. And a third one is about autonomous vehicles. And instead of having a white collar in his Tesla going to the La Défense and reading his paper, we're focusing on areas where people need the most, rural areas with shared electric autonomous shuttles. Because we think really that where is the need and how technology can answer it.
Very interesting. Frank, I know that AXA as well have launched quite a few ESR initiatives as well. Can you tell us a bit more about what you guys have done?
Yeah, so you want me to talk about AXA Climate?
For example?
For example, okay. So we believe the technology, and notably satellite images, so big tech, could really help us to transform completely the way we do provide coverage to people. And notably by reinventing, I would say, what we called in the past index insurance or parametric insurance. I don't know if you have heard about that, but it's basically very simple process, very simple to understand for everyone. It's just that we do not reimburse when there is a damage. we reimburse when the index or the figures we agree on is overpassed, or like we take a number of rainfall, and then we say above this level, above this index, we pay you 20% of the crop revenue that was initially planned. So this is parametric insurance. We apply that for mainly weather conditions type of coverage, and we go for agriculture and countries sometimes, solar farm, renewable energies, etc. So we really believe that kind of new experience and new process of insurance is kind of reverse insurance, right? You pay and you are covered, and in case something happens, then you automatically get the payout. So, new way of doing our business.
It's quite nice. And I believe you've done as well quite a few things in the healthcare sector as well during COVID.
Yeah, for sure. So we call it beyond insurance and health insurance coverage that we can provide. We are also working in collaboration with Microsoft, notably to plug different added value services around health, what we call the patient journey, to cover the patient journey from A to Z. This model also, we got some inspiration from China and from a Chinese famous insurers that are providing this type of teleconsultation, symptom checker, etc. Everything is online until you receive or someone knock to your door to deliver the drugs. So and everything in 15 minutes. So we are plugging those type of added value services to a backbone in collaboration with Microsoft.
Okay. So maybe I'm going to ask you now the same question. What is the next big thing that we haven't heard about yet, or what is really the next very important tech development for the insurance sector? Maybe let's start with you, Sacha. Any view on that?
I think, look, from our vantage point, there are a lot of, I would say, a lot of activities going towards retooling the piping of how different participants are connected. So under the umbrella headline of, there is a lot of attempt to move the market, so to speak, towards a marketplace. And I think fundamentally that is a retooling of the connections between different participants that ultimately results in a service or product being furnished to the client through digitization of those interactions is something that it seems to me, sort of an inevitable progression towards that. How quickly that happens and in what sequence exactly, it's sort of, nobody has a crystal ball, but I think it seems I don't want to say inevitable, but it seems a natural progression towards that outcome.
Thank you. David.
The timing is good because we've just released the latest edition of the Innovation in Insurance Awards that we publish with the EFMA Association for 8 years now. And I will reinforce what Frank was saying around health, because there's quite a few trends going in, like ESR and social responsibility. This is really booming up. But the big one right now in terms of momentum is around health. Everybody has a health agenda. The Allianz, the AXA, the Cigna, the Bupa, everybody. All the tech players, the Microsoft, the Amazon, the Google, they all have an health agenda. Everybody wants to move into that space. This is convergence of ecosystem. And this is where the insurers, at least in Europe, may be different in the US, but in Europe, the insurers have a huge role to play. After that, I don't know if it's a winner-takes-all game or not, because you cannot have a 5 platform for access to care per country, but this is really, really a good momentum now.
Nicolas.
Connected brain juice.
Wow. All right.
Yeah, because you can
have
connected data from cars, using it for prevention, for assistance, and insurance. great. But for instance, for the autonomous vehicle, for mobility for all, autonomy for all, we are working together with 12 groups in open innovation, with Orange, Microsoft, Forestia, even competitors, insurers, Maif, Groupama, BNP Paribas, Cardiff. And that's, I think, above whatever the technology, it's how together we can build something new.
Frank.
Yeah, immediately I would look at what I call the EKYC, Digital Know Your Customer, so all what we see when we open a bank account in a neobank, right? It's you get the number in 5 minutes, and the compliance people are super happy because it's 100% compliant, right? So immediately I think those type of technologies and innovation definitely need to happen, and that might be pushed by the regulators. And if I look longer term, I'm a super blockchain enthusiast, so I feel like the traceability of it will be key at some point. The smart contract, which sounds a bit weird, but actually it's by design made for insurance. It's a policy system at some point, and I don't know if everyone knows about the origin of insurance, but in this cafe, Lloyd Cafe, it was a ledger where captain were writing down where they go with the amount of marchandises, etc., etc. So definitely, I would have a close look at blockchain and even further at crypto.
Okay. So maybe I can ask you the big question again. Then is the sector finally ripe for disruption, or is this just a natural evolution of what we've already seen over years? And I know you always have big smile when you mention the word disruption, but is it really right to talk about disruption for the sector or not? David.
I was smiling because I don't want to give you the consulting speech, because in the consulting speech, we do, no, but it's very seriously, actually we do monitor the disruptibility index of sectors. Insurance, yes, the disruptibility index is very, very high, but the small caveat that I would make is that in the study, at least the one I'm following, it has been very high for the past 5 years. So, you know, that's a matter of timing. No, but I think there's a lot, joke apart, there's a lot going on in technology and insurance, and definitely, as in many sectors, the COVID has accelerated digital transformation. And when we look at the budget of insurance going into tech, into cloud, into artificial intelligence, I mean, this is 5 times above what the level that was before COVID. So
I mean, there we have it. So the answer is it can be disruptive, but if the insurers get a move on, then it perhaps won't be in the same way as other industries have been. But and I think it's very interesting. There's a lot of the stuff we've heard today, and hopefully we'll get some interesting questions for the panel to address in the next few minutes as well. I think what we've heard there is there's so many dimensions to the application of tech within insurance, and that perhaps isn't surprising because so much of the inherent insurance product is about raw data, ultimately. Obviously, the human touch, the way you interface with clients is also extremely important on so many levels. But ultimately, these are the original big data pools, insurance companies, but they just weren't particularly well organized going back 20 years. Fascinating, and thank you, gentlemen. That's been really enlightening on a number of fronts. And thank you, Sasha, as well. Hopefully you can still hear us. I'm going to hand over to Eric, who's going to be Master of Ceremonies. So hopefully we'll have some questions from the audience. And I think for those of you online, we have a facility also to ask questions as well. Eric.
Any questions from the public? I'm going to...
Yes. Okay. Hello. Thank you very much for the panel. Very interesting. I'm leading the blockchain effort for Natixis, so I was super interested in what Frank was saying, so I want to know more. What about crypto? What are you envisioning in that space? And so that's one question. And the second one, you guys had been working with FIDSI, and you stopped that. So I would like to know, because you spoke about smart contracts, are you going to resume the effort?
Yeah, so I was mentioning crypto more maybe to look at the stablecoin that will happen soon, notably for Euro, because I heard that the agenda is finally coming faster, and I've been looking at that in China, so big corporations and commercial banks and probably asset managers and insurance company will be kind of distributors or facilitators to those stablecoin. For smart contracts, yes, it's true. We stopped FISI. I think it was a very interesting project. So I've been one of the sponsors of it. We decided to stop it because it was designed for being a B2C platform, which was not enough. The market was not enough mature, I would say. So people didn't want to go first to their travel website, book a trip, and then go to FISI, etc. The few ones that we got was super crypto optimist, I would say, and they were not. They wanted to pay in crypto. So it was not the right setup. We stopped it in B2C mode. However, we still have our travel AXA Partners division, right? And we could probably a day move again to smart contract for just the basic travel insurance. But then this will be hidden. The technology will be hidden at some point. And I think it will be much more seamless as an experience. And I'm enthusiastic also about blockchain, and I mentioned the traceability. You have Accenture leading an initiatives with several insurers where we are not yet, but with sharing data on this ledger for claims. That makes sense for instance, but there are many other opportunities we can discuss later. Happy to meet.
Yeah, I think you mentioned it briefly, but I just wanted to have your view, which may change on a large question, but on marketplace and your competition with Google or Amazon, and how you see those companies interfering with the insurance. I know it's a big question, but do you see them as competitors, as business potential, or how do you see those players?
It's a question for... Okay. So I see really big tech players as enablers. Today, it's true that they are bringing new standards in customer journey that has to be applied at some point to the insurance industry. So we are seeing customers satisfaction, I would say, or the level of expectation is higher than before. So definitely there is a room for tech insurance or insurance tech for us, but maybe also for them. I've seen by the past a lot of initiatives announced by those tech players with no real impact in our book, right? So again, I think today it's a cooperation approach that we look for. Well, I think the best of two worlds would be in cooperation, in cooperating with those kind of tech players.
And to complement, I think that first it's good for inspiration and challenging. Second, when Google tried it in Europe, it was looking for a worldwide insurance model, and it's hard to apply it from a country such as France, which is really different from another one. I'm more, as I'm personally not afraid, but challenged by Amazon, because you've got a logistic aspect. If you want to send something, a little piece of paper, because it's not digitalized yet, to put on your car, it's better if you got a physical action, rather than Google, which is pure digital. And for instance, today, if it's 3 a.m., sorry, you've got a car accident, you'd be happy to have a chatbot to answer you directly. However, afterwards, you'd like to see or talk to a human. It's both of the worlds which count.
Maybe on Amazon, Amazon is our top 10 clients for logistic in our AXA IM real estate division. And we also provide a lot of tailor-made insurance products on the Amazon platform for their distributors or, for the last miles insurance. So we are cooperating also with Amazon on that particular aspect.
I have a question myself. Sort of rolling on from that and the discussion about Amazon in particular, what we're starting to get towards there is topic of embedded insurance, right? And there's probably, one would expect, especially with the Internet of Things really taking off over the next few years with 5G and so on, with autonomous vehicles. And we've discussed a lot of these things, or touched on them already. But if we look at the world, insurance world of 10, 15 years from now, how much of the actual insurance volume that we see in that future world do you think could be things that we just don't see at all today? And embedded insurance is probably one of the most obvious areas for that. But how much do you see the world changing in terms of the underlying product mix?
You were talking about autonomous vehicles. Today it's more on an individual basis. Tomorrow, if you listen to Elon Musk, you say, okay, give me your car and I'll take care of your insurance. You'll go from individual to fleets. So this is the kind of evolution and which could change something. And going from individual risks to serial risks, because if you've got a bug somewhere, it could affect 1,000 cars at the same time.
Yeah, we had a chance to have an experience with Tesla in Asia a couple of years ago, where it was the beginning of Tesla in Asia, but then we were insuring 100% of Tesla through the car retailers in Hong Kong. And then the topic of discussion and debate was, from Tesla, a request to lower the price of insurance because the car is safer, there is this autonomous driving features, etc., that make it safer for the drivers, and the typology of drivers are quite different from others type of cars, etc. And from our side, we were saying, look, the cost of repairings is twice, if not 5 times, the price of others. And we did not agree at the end to really provide something that fits with the client needs. So when it comes to embedded insurance, I think a large part of what we call, it's like very basic and pocket product will be embedded, because it's quite painful to move from a website or even to a commercial relationship to another for the same product. So in the car industry now, you can buy, or I would say rent a car, everything embedded, right? So I think it is, for commodities insurance, this will be easier and seamless experience to go for a full embedded insurance model.
I would complement by two visions. One on the product. I'm less bullish in the sense that the biggest driver for me for innovation in product insurance, that's regulation. If you look at what happens, I mean, even the electric vehicle, I mean, that's a very good example, but it's not Tesla, it's actually regulation. I mean, regulation, perception of people translated into regulation that will accelerate. And true, I mean, when we did the plan 5 years ago about electric autonomous vehicle or electric vehicle, I mean, they all have been updated. But regulation, that's really the key driver, rather than technology players coming in. For me, I mean, that's my personal opinion. And if I were to bet some money, I would put more on the, I don't know if marketplace is going to be the answer, but distribution. I mean, there's so much money poured in distribution, and the marketplace, it's not only the Amazon. It's the, I mean, you have a marketplace within marketplace, like Branded in Amazon. You have BlaBlaCar, where you can sell insurance. You've got like 50 or 60 marketplaces just in Europe, having millions of customers. And for the time being, they do not sell insurance. And they might be interested in selling insurance in the future because that's a relatively cheap marginal source of income, because basically you are a distributor. 70% of the value in insurance is in distribution sometimes, so you get all the money with little or no investments. Car companies, I mean, after COVID, they are all looking for new sources of revenue, and there's quite a lot of thoughts right now in the industry, like internalizing car insurance. So yes, there are moves. I'm not so sure this is coming for product from the technology players, like I said, but distribution and possibly marketplace, yes.
Yeah, thank you very much. Yeah, my question was really on regulation and how do you see regulation having an impact on you know, all this disruption, and also what are the differences between, let's say, Europe, Asia, and US in terms of regulation?
I'll let Frank answer for Asia and US, but in Europe, we should. It's important. It's disruptive, but let's take open insurance. If you say, okay, open bar, I'm sharing my data with everybody, the risk would be to demutualize things. Tomorrow, you're overweight, too bad for you. You may be in more UK scheme, while insurance, for instance, on car insurance, it's more mutualized. A young driver doesn't pay the real price because we are sharing the burden. So, and for AI regulation, if you pay AI risks, you may say, okay, it's health insurance. I hear health, so I don't like it. While it's an essential service. So regulation can be good as long as it's pragmatic and looking for the citizens' good.
Yeah, in every continent, I've seen regulators really, more than opening the door to tech, pushing for it, notably in China. And I think this move will be stronger in coming years. Notably, I mentioned the eKYC process, which is kind of new way of doing compliant and relying on client or customers or distributors to make it happen in less than 5 minutes through a smartphone, with artificial intelligence, video recognition, face recognition, etc., etc. So definitely, and I see also a new license issued by French regulators recently to uninsurtech players, who is, by the way, full carriers, like few ones, like Allianz and others. I'm talking about Achille, which is a new insurtech players financed by Xavier Niel, which claims to be the new free of insurance. So I think, and if we go further in that direction, they might push, like they did for banks, to a regulation where open insurance will be one of our way to innovate, right? So yeah, definitely, I think they are pushing for technologies.
Right, we have time probably for one last question. We just happen to have received a question from Emmanuel de Resseguier. So I'm going to read it to you, and maybe that's one for you, Sacha. Artificial intelligence, machine learning, smart contracts, etc. are now affordable technologies. How come that innovation in insurance is almost always about front end, new products, but hardly ever about automation in back offices? It is still highly manual and often not reliable enough. Sacha, do you want to?
Sure. I'll give you two thoughts. One is it's very, very difficult, given the landscape of the infrastructure, and probably the front end is the easiest place to innovate. And then the other thing I would offer is that unlike other, I don't want to call this a bubble, but unlike other if we compare this investment wave to other technologies, other industries, for lack of a better word, I would suggest there isn't essentially a new wave of buying of insurance happening, right? You know, the amount of money that is spent in the economy on insurance, be that a PNC, possibly there is some genuine innovation in health and stuff like that, where, you know, with wearables you can actually right-size the product. But at the end of the day, there isn't a imminent explosion of buying of insurance about to happen. And therefore, I think the amount of investment and where that investment is directed to is a reflection of that. It's a lot of it is directed to the front end, which is about competing on nuances of the offer to the client, i.e. I will compete for the market share, rather than a reflection that the market as a whole is about to explode.
I fully agree, and maybe offer a comforting thought for Emmanuel. I think it's maybe, I'm not saying it's existing, it's less visible. I mean, when you look at, when you take a back office, like Accenture is taking a back office, you're doing 80% automation on the processes that you're taking. So basically, and you do this with all this type of innovation, with smart boards, smart automation, and all the technology stack that you're doing, and insurers are doing it as well. Obviously, it's less visible and it's less flashy than the IPOs or the venture funds that we are seeing, but it is happening, and I think this is the real case for many insurers, as a matter of fact.
You have how many dentists do you have in France?
Quite a few, I guess.
30,000. At least as many as kilometers of rail for railroads. But when you want to automate these invoices, today it's around 85% that you can go directly from the customer to the settlement of the payment. There is still 5, 10, 15% that can be manually treated. So that it's great to automate, and it's great to have people working to address the rest, which is not intelligent artificially.
Do you want to add anything to that?
No, yeah, automation in decision-making process for sure on claims, but also we've been working recently on predictive analytics for the leads that we are receiving from the web or from agent or from brokers, etc., to work on the best ones, that we can convert, etc., that will make serious business, etc. So there are room for artificial intelligence in all the value chain in the insurance industry.
Gentlemen, I think that concludes our session. Thank you very much for your participation, and hope to see you at the drinks afterwards.